Good morning, everyone. Welcome to another RF Crypto video. On today's markets, still down. The downward trend is continuing for about a week now. The global crypto market cap is at 1.95 trillion, which is a 2% decrease from yesterday. Most of the market is down, as you can see, but slowly, I think it's going to start making its way up because yesterday the markets fell by almost 3%, and today it fell by only 2%. And actually, Bitcoin is up by almost 1.5%, Solana is up almost 1%, Terra is up almost 5%, but the rest of the market's still in the red, it's still down. I think a correction is happening and everyone is fearful at the moment. People aren't really buying, and a lot of people are currently selling because fear breeds more fear. This trend usually happens, and when the markets go down, they tend to revert and start going up again after a week or two. And we'll just have to watch the charts and the coin market cap. Arcane Research states that 43% of Bitcoin trading volume are during the US market hours. The US dominates Bitcoin trading arena according to a report published by Arcane Research. Bitcoin's 90-day correlation to the S&P 500 is currently at its highest since October 2020, while the US trading hours show the most Bitcoin activity. And trading activity tends to immediately pick up as the US stock market opens. Now we can see that even though the US is one of 190x countries in the world, it still dominates cryptocurrency trading. If they dominate Bitcoin trading, by extension, they dominate cryptocurrency trading. 43% of all Bitcoin trades are taking place in the US. And because they're taking place in the US during trading hours for the stock markets, it will naturally be correlated to the S&P 500. Another interesting fact is that American traders also kick off the week with gusto. Up to 50% of Bitcoin trading volume occurred on the last 3 Mondays and Tuesdays of the year. This illustrates that American traders take the lion's share of Bitcoin trading activity, and they do so early in the week. So they mostly trade on Mondays and Tuesdays. And I think this is mainly because during the weekend, during Friday, the price is usually at its highest. And then if there's any correction, it happens during the weekends. And then Monday and Tuesday is when people start buying crypto again and restocking, buying sort of the dip, and that's why there's more volume on Mondays and Tuesdays. On other news, crypto IRA platform iTrustCapital raises $125 million at $1.3 billion valuation. So crypto individual retirement account software platform iTrustCapital has raised this through a Series A funding round. It was led by Left Lane Capital, and as part of the investment, its principal, Matthew Miller, will join iTrustCapital board of directors. So it's a big step. The fact that one of the investors' main principals are joining the board of directors indicates that investors are having more say in the company. This funding will help iTrustCapital expand its products and services, scale its client services, and development teams, launching new marketing channels, and explore potential strategic acquisitions. So iTrustCapital basically allows qualified US-based investors to transact in cryptocurrencies while maintaining the tax advantage of an individual retirement account. Right now, it provides access to 25 cryptos alongside physical gold and silver, and I read somewhere that it now offers 25 cryptos, but it will increase over time. They have 27,000 funded accounts, and they aim to add another 180,000 to 200,000 in 2022. So they aim to multiply their user base by 10. It's grown from $2 billion in total transaction volumes to more than 4.5 billion in the last 6 months. So in 6 months, the transaction volumes more than doubled. And a lot of people are moving into iTrustCapital because it offers the same tax advantages of individual retirement saving. In essence, they'll pay less tax when they trade cryptos, especially at a time where we're seeing more regulation in the United States relating to cryptocurrencies. JP Morgan says that Ethereum is losing NFT market share to Solana. So Ethereum's market share of NFTs has dropped to around 80% from about 95% at the start of 2021. So when the NFTs started to become a trend, Ethereum was one of the only platforms or one of the only solutions that allowed the trading of NFTs. And that's why they dominated. But as Polygon, as Solana get more into NFTs, this market share is shrinking from 95 to 80% is massive. And this is only from August, because from January till August, Ethereum still dominated NFT trading volume at 95%. But since August, Solana has been capturing the most NFT volume share at the expense of Ethereum. And the simple reason why Ethereum is losing so much market share to Solana is the fact that there's a lot of congestion in the Ethereum network and the high gas fees. If you want to buy $100 worth of NFTs, you'll probably fork out $150 to $200 just in gas fees. That is ridiculous. It's like going to a store, wanting to buy a $10 cereal, and then you pay another $12 on top of that $10. So the price marked on the shelf is $10. You go to the counter, they scan it, and they're like, oh, your total fee is actually $22. So that's what's happening in the Ethereum network. As we know, Solana is more of a layer 2 solution, and they offer very, very quick transactions, so that solves the congestion issue, and the transaction fees are very, very cheap. They're not even in the dollars, they're in the cents, and that also solves the high gas fees problem. And if Ethereum keeps losing NFT market share going into 2022, it could be a bigger problem in terms of its valuation, because a lot of the increase in its price coming from 2021 onwards into 2022 came from the fact that they dominated the share of NFTs trading volume, and the more that NFTs started to gain traction, the more Ethereum was in demand. And if this demand decreases while supply stays the same or increases, it could be a problem, because the prices could start going down, especially since Solana, Polygon, and maybe other networks are going to start coming into the NFT space. They're going to start building NFT networks in their own platforms. This could spell trouble for Ethereum, unless Ethereum 2.0 comes out and it solves these problems of congestions and high gas fees. I mean, we've been waiting for Ethereum 2.0 for a while. I'm not saying that it's not going to come on, but I don't have my high hopes. But it's more than welcome, and I wish it comes and it gets implemented, because Ethereum is a great, great network. The UK financial regulator is to limit crypto ads to sophisticated, wealthy investors. They want to tighten restrictions on crypto asset advertising. They say that too many people are being led to invest in products that they don't understand and which are too risky for them. And they also want to ban incentives such as refer a friend and new joiner rewards. So these are affiliate rewards, because this incentivizes people to recruit more people into these platforms. They say that, the common investor like you and me, they get duped into thinking that cryptocurrencies offer high returns, and we put all our life savings in it, and once the market crashes, then it goes down. And because we're not sophisticated investors, we sell at a low and then we lose so much money. So they want to only limit crypto advertising and its exposure to high net worth and sophisticated investors in the UK. USDC flips Tether on the Ethereum network. So the total supply for USDC on Ethereum has surpassed that of Tether, putting USDT in second place on Ethereum at the first time. Also, doubts over Tether's backing has caused its public image to decline over the years. Controversy has plagued the company over how the stablecoin is collateralized and how its reserve funds are managed. Why this is because a stablecoin, to become stable and to become pegged to the dollar, if they release 1 billion coins, if it's 1 billion coins, $1 each, that's $1 billion. So they have to have cash or assets worth $1 billion in their balance sheets to back that up. If they don't have that, it's a big problem, because there's nothing to back those stable coins and the price decreases. There has been controversy because Tether hasn't been so transparent in how much asset it holds, on how much cash it holds, on how it's backing the coins in circulation. Circle, which owns USDC, on the other hand, has been more transparent about its reserves. However, Circle CEO Jeremy Allaire supported in November 2021 Biden administration proposal to treat stablecoin users similarly to banks. So Circle CEO is basically saying, treat us like banks. Make sure that we are transparent. Make sure that whatever is in circulation is backed by something and it's open and the Reserve Bank can actually see it. And the fact that Circle CEO is supporting this Biden administration proposal is indicative that he's quite confident and he is relaxed, because USDC seems to back whatever it issues into the market in terms of USDC. And touching on USDT and the issue that was at hand, for starters, there is no Bitcoin bank. Exchanges are paid in Tether for Bitcoin. In a perfect world, 1 USDT would equal $1. But like others have said, the company behind Tether doesn't have the dollars backing Tether as $1 to 1 USDT. So what this means is that there is 60 billion USDT in circulation, But Tether in its balance sheet doesn't actually have $60 billion to back that's what is in circulation. This isn't a problem for now because like any other currency, it's worth what we collectively believe it's worth, which is $1. It's just like fiat. There is enough money behind Tether to cover the current daily volumes. The problem may arise in the future if people start to mass sell off their Tether. For example, if it's over $10 billion worth of daily trading volume due to some like black swan event or a greater realization of what's going on. If there's a black swan event like for example, if there's another version of the 2008 financial crisis, there could be a massive sell-off of USDT because these investors will want to get rid of crypto assets which are unsafe and move into safer assets such as cash, treasury bonds, and safer equities in order to preserve the value of their capital. Or another scenario is that people start realizing that, Tether have these USDT in circulation, but they don't have the money to back it up, and they're going to start mass selling it, causing the price of Tether to collapse if, this is a big if, what is in circulation is not backed one-to-one in their balance sheet. And when this happens, as people flood exchanges with Tether sell requests, they may or may not honor them, causing mass panic in the markets, and this is bad. Either the people or the exchanges will be left holding the bag. And if history is any indication, Tether holders will be left holding a worthless bag. A lot of people are going to be losing a lot of money. In a perfect world, the company behind Tether increases their USD backing to an acceptable rate as soon as possible. And this is why they want to bring regulation in place. They could say, have at least 80% of your USDT backed. So if you have 10 billion USDT in circulation, at least have $8 billion in reserves. So at least you can cover daily volumes, or you can cover like a gray swan event. And there is talks that Tether is only backed by 2.9% of cash, which would make it 1 USDT is equal to $0.029. The company has refused to be properly audited for years. They've been dodgy about their balance sheet and their financial statements. And most of their reserves are undisclosed Chinese commercial papers, which are dodgy. And Tether is under investigation for fraud and forbidden to operate in the United States. And this is the crux of the problem, because if there is a stable coin that is in circulation, and if there's a certain amount of coins that are in circulation, that should be backed in the balance sheet. And it's a problem because USDT, or Tether, the company that prints or mints USDT, they're not transparent about the reserves. On the other hand, Terra, which owns UST, and Circle, which owns USDC, they're a lot more transparent about their holdings. They're a lot more transparent about how their stablecoins are backed, what assets they hold, and how much cash they have. And this is why a lot of people are flocking out of USDT into UST and USDC. And now it's time to see how Tether is going to counter this problem, if they're going to start building the reserves, if they will come clean about what they actually have. If they come clean and it's backed one-to-one, everything's good. People will start going back into USDT. But if the reserves are less than what is in circulation, it could trigger a massive sell-off and your USDT could be worthless. So this is something to keep an eye on. It's something to follow on every day. This is what I'm following on every day because I have to admit that I own some USDT, of course, and it's something that worries me a little bit, not too much as yet, because there hasn't been any massive sell-off. So keeping that in mind, this is the end of today's video. Thank you for watching. If you enjoyed the video, please leave a thumbs up. Please hit the subscribe button, and I will see you for the next one. Thank you, invest wisely, and cheers.